Morning, good afternoon, good night. Welcome back to another schema scalper video. Today we're going to be looking at the PM session ICT Silver Bullet. I'm actually going to very soon I'll be creating a step-by-step of how exactly I do it, what I look for when I look for these things, like what's happening in real time and so forth. So let's get into it. So we're going to be looking at Tuesday 15th of August. And the time will be from 2 o'clock. These are time for entries. So 2 o'clock. Hey, wasn't splitting. 2 o'clock till 3 o'clock. It's all New York time. And then we are going to be looking at liquidity from 12 till 1:30. So extreme highs and extreme lows from 12 to 1:30. This is launch buy side, launch sell side. Here we can see sell side was taken. And inside this range, you can see the first fair value gap was up here, second one down here, third one here. I'll actually mark all of them up. I'll start by a 5-minute chart. I'll mark up every fair value gap down and every fair value gap up. But since we already see what the market's done, I'm going to mark all of it just to save some time. I'll mark all fair value gaps down. So right here, just mark up fair value gaps first. It's a regular fair value gap, 5 minutes. No inversion fair value gaps. Another regular fair value gap in here gets respected. Then this one got disrespected. This fair value gap. Fair value gap up here, it's respected. Inside here, no fair value gaps. This one now becomes order block. Order block got respected. So I'll actually mark this up. So you're trying to read price before, even before this 2 o'clock, the 2 p.m. time. You're reading price and seeing which direction the market's likely heading to. And you're trying to get a bias off of that, off off of just PD arrays which were respected, which were rejected. Like this for instance, it closed above the fair value gap, but not the candle that made the fair value gap. Inside here, this now becomes intermediate swing high, and the last up close candle will have importance. So that will now, this whole area will become a order block. So we don't want to see price closing inside this order block. As you can see, they respected that. So now the next one, the next PD array, after it respects that, creates another PD array inside here, fair value gap. As you can see, inside our time of entry, it respected that, and the market dipped. It's gonna mark this up. 5 minutes. 5 minutes fair value gap. And I usually go 5, 4, 3, 2, 1, but for the sake of time, I'll just go through to the 2 minute. I should actually just put it on replay. I'll put on replay mode so it's easier. We'll look at 2 minute now. 5 minute order block. That falls now within the 2 minute as well. Is 2 minute higher, so we could be looking at it not closing above the 5 minute fair value gap, but it could now dig into that 2 minute fair value gap. So it's now 2 minute, and you'll see on the 1 minute this is going to be the exact same case. It won't, 2 minute fair value gap. Or actually I'll just say SIBI, it's easier. All of these that I'm marking now are SIBIs. 5 minute, that's an order block, that's correct. Oh no. Now we're doing 5 minute SIBI. So usually with this 5 minute SIBI, above that could be 2 minute or 1 minute areas of importance. Like this now, for instance, become an inversion gap. Inside here, 2 minute inversion gap. Inversion fair value gap. It becomes a 2 minute inversion fair value gap. And I'll show you this. That high and that low are almost exactly equal. This high comes in at 15,187.5. This low comes in at 15,187. Just make sure it's actual high on the high and on the low. On the high and on the same line. So that's a 2 minute inversion gap. Goes into the inversion gap, plummets down. And it never revisits this area. Now we'll go to, this is all still within the lunch hour. Run stops, gets liquidity rated, gets liquidity rated. Now we'll go into 1 minute. Oh, inside here as well. Another fair value gap here and here. So it wouldn't close above this 5 minute fair value gap, but we are looking at the 2 minutes, so it could dig through that. Regular fair value gap, 2 minutes. will go into, okay, it made a swing, so this now becomes an order block as well after this low is taken right there. This becomes an order block. This swing high is actually higher than that swing high, so this now becomes the order block as well. And you can see the sensitivity at this level. I'll get up as 2 minutes. So I have it like that. It doesn't reach into that consequent encouragement of the week. So in terms of order flow, it's respecting all of these PD arrays telling us price should be heading down. It's respecting that, respecting order blocks, respecting subbies. So when you get into this time, we already know we're looking for only sells. So what you're going to be looking for is a breakdown below this lunch session low, or a break above that, the lunch session high, and then we're going to be looking for sells within our silver bullet time. And since it broke the lows, you want to divide this into quadrants, and you want to buy, or you want to sell above the 25%. So anything above the 25% is a selling area. So that's a selling area. Anything above this. That's a text, that's the fall. All the way up to this buy side. So inside here you're looking for fair value gaps. If this chart was reversed and it broke the highs, and then we were looking for continuation, you'd try to ignore this top 75, the 75% to 100%. You wouldn't look for entries long inside here. You'd only look for deeper entries below that. So from the 75% down to the 0% would be a place for looking for buys as a continuation. I'll go back down into the 1 minute. Now you see that candle low, there was order block on the 2 minute. In the 1 minute chart, I could measure consequent encouragement out of the 2 minute order block. It's now found in the 1 minute candle, that exact low, and it falls at 50%, just touches 50%, and a massive reaction down. So we've got order block, got a break lower, Gonna run higher. It's respecting bullish order flow until we get into this area, which is our 5-minute fair value gap. On the 1 minute, we've got a small fair value gap higher inside there. Then we've got this fair value gap inside here. I'm not gonna mark it out. 2-minute fair value gap still standing. Nothing closed above. Nothing even closed inside. Just touched it and it reacted. There's a fair value gap up here. It was uses an institutional order flow entry drill right there. This area is now also, I could actually tighten this area, saying that that's now the 1 minute inversion fair value gap. Because there is perfection on this candle right there to here. I'll show you this. The high comes in at 15,190.5 and this low comes in at 15,190.25. So it's just a touch over, just allowing entries in. And then when it gets to this area again, just bounces off. Crazy reaction. I'll delete that so you guys can see the reaction. And it falls on 75% of this range. But this range wouldn't have been known yet. So I'll just remove that. We wouldn't have known that range yet. Gets in there and it just bounces off. Just disappears. Now we're going to be looking at entries. We want to enter off this 5 minute fair value gap, this SIBI. It's 5 minute SIBI. And our stops would be, a reasonable place would be up here in terms of entries. So we would enter 1 minute fair value gap, so right there. Stop would be above these highs. 14-point stop, and we would be using as a target, we would take this high since it fell within the within the fair value gap swing high. It becomes the intermediate term swing high, and we're drawing it out to the first swing low, using that as a projection. And our target would be 4 standard deviations right there, 1 to 6, or even if we entered a bit later, this would still be our sorry, getting a burp, intermediate term swing low and intermediate term swing high. So we're using those two areas as a projection down. If we wanted a tighter stop, we could enter down here inside this fair value gap. Because now we know it reacted off the order block. It's right here, the 2 minute order block. Reacted off the fair value gap, reacted off the 5 minute SIBI. So there wouldn't be I'm not going to say high likelihood, there wouldn't be a real another reason for it to go above these highs. So that would be a safe stop, 15 points, and we are targeting still same area, 85 points as a target. Just reverse that. Short inside here. 15-point stop. 85-point target. 1 to 5. If you guys enjoyed this video, like and comment and subscribe. Yeah, till I see you again. Or till you see me again.